Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal Budget Headquarters.
Taiwanese index 0.6% higher. The Hang Seng trading with healthy gains as well.
Meeting a good proportion of our requirements from capable American companies.
48,926. And that's the first support here.
LCR is liquidity coverage ratio. It's a liquidity requirement for banks to maintain at all times.
So the Nifty is starting at about 23,500 and that's about 135 points higher.
Growth seems to be a problem across many sectors. It's just the outlook seems to have improved.
Labor shortage still continues. We still have a shortage of close to 4,000 people.
Whatever the MPC is trying to do will be very much focused on trying to get the domestic growth up.
Big story that's breaking right now on the agencies in Bloomberg is that China's hitting back at Trump with tariffs on U.S. goods.
BMC announced that it's planning on opening 25 new public clinics.
Strong day on Dalal Street with the Nifty crossing the highs of the budget day. As
Good afternoon. You're with us here on CNBC-TV18 Motilal Oswal Studio Budget Headquarters. Markets, of course, are roaring, and they're roaring after a while like this, at least the large caps, even though broader markets are lagging a little bit. But nothing to complain, really, because it's been up since the morning with little by way of hesitation in terms of the direction it wants to take. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, and talking about the budget headquarters today, we've also surpassed the budget intraday high of 23,632. So that, of course, is a positive, and broader markets also participating in the upmove.
Absolutely. You really can't complain with this market, right? Because you've got mid-caps participating, broader indices are doing well, and barring consumption, most parts of the market are up. There's buying even in some of those beaten-down capital goods names. So it's pretty well-rounded this session so far.
Well, that's right. You know, just a week or so ago, people were talking about 22,700. Surprise, surprise, we're almost at 23,700. So that's the way the markets have turned around. And it's giving you some hope that maybe, in fact, bulk of the bad news for the time being has got discounted. Just going by yesterday's trading action and going by the screen today as well, we have relatively outperformed, in the last couple of trading sessions after underperforming in January. So you'll take heart from that fact.
No, absolutely. And, I just hope that something... if we go at this pace, something is left for the RBI, right? I mean, by the time we get to the RBI in terms of post-reaction, because markets are now completely penciling in a rate cut, and I think a rate cut will come. But it's not just a rate cut. There are other things, more liquidity-enhancing measures, etc., which the market is hopeful of. So the Nifty Bank, of course, is leading 1.5%, is doing better than what the Nifty is doing. And, those levels that we were talking about, right, if you can just quickly put those up. So the resistance is 23,632. Okay, I think we've moved past that now, 23,675. As we were walking in, we were around those levels, but I think we've now taken that out. And Nifty Bank is also taken out. At least intraday took out that high of Saturday, which is 50,009, I think was the high. And we are at 49,960. So we are almost there. I mean, so both Nifty and the Nifty Bank around their resistances, Nifty slightly higher. The mid and small cap part of the market is a little more restrained today. So especially small caps. Mid caps are still okay. But, the 0.75% higher as far as small cap index is concerned. Market breadth is positive, and of course, enough and more in terms of single stock action, which is underway. Rima.
Single stock action. Asian Paints stock was up more than 4%, but now is moderated, tempered its gains a bit, but still up close to about 2.5% on Asian Paints post the numbers. There you have it. There was a spike initially on the back of the margin beat, but the stock now is just up 2.5%. There's a rebound taking place in many of these capital goods defense names. So L&T, BEL advancing 3%. HAL in the mid-cap space higher in trade. You've got strength in Adani Ports. Reliance Industries is a big mover today, 3% up on Reliance Industries. And conversely, you've got Trent That heavyweight is down nearly 7%. Perhaps it's the launch of Shein, the relaunch of Shein after nearly 5 years, that's taken the wind out of trend and boosted Reliance Industries today. Other notable losers in the large cap space include some of these staple companies yet again, like yesterday, Britannia and Nestle on the back foot. Hero MotoCorp too is nursing a loss of more than 1%.
Okay, now I don't want to sort of spoil the party here, but the fact is that US futures are lower. US futures were doing really well because of this exuberance around things having come to a bit of a standstill with Canada and Mexico. But the problem is China. And China has announced countermeasures already, which is why globally there is still a little bit of unease about how this is going to go. And whether, what kind of reaction this will now get from the US again. Because what has China done? We're talking 10% tariffs on, on a lot of different things like liquefied natural gas. There is, oil and agricultural equipment as well. There's also coal, by the way. So any of this coming from the US into China, there is a counter tariff that the Chinese have now declared. So this is, this is tough talk from China coming in. Remember, tomorrow is when the Chinese markets open. Finally, after that big Lunar New Year holiday, we will get the true reaction in terms of how the equity markets are, and even the currency market, the onshore currency markets are feeling about all of this. So that's the situation right now. And what you're seeing on your screen, that dollar yuan, this is the offshore traded yuan, and that has come to this level of 7.29. So continuing to see a lot of currency action over there. But back to our screens, I guess, Nigel, it's been so far so good. A couple of the numbers have also helped. For instance, I think I was seeing Asian Paints where the margin hit was not as bad as what the market had feared.
Yeah.
That's one stock that's bucking the trend. Otherwise, it's a weak day for consumer.
Well, that's right. If you look at Asian Paints, it saw a bit of a recovery and now it's cooled off. It's still up 2.5%. But I think the other one to look at is Berger Paints. Just pull up the intraday chart out there. That stock as well was in the red. It recovered into the green. So that's one stock that you should keep an eye on. The paint space, the initial numbers on volumes and margins look better from Asian Paints, and it seems to help sentiment on these paint stocks. The other stock I'm looking at is Ultratech Cement. There is this buzz now that there is a price increase that's come about. Normally in the first half of January, you don't see a price increase. Then you wait by for the budget. But what I understand is there's an attempt to push prices higher. And that's been the case for the last 1 year or so. You attempt to push prices and then some part of that gets absorbed. So there's another attempt being made on ground to push through a price increase. Demand needs to catch up. And then, in fact, we'll see how much of that price increase sustains. But normally it starts from south, then moves to the west, and then to other parts of the country. So that's why you're seeing Ultratech Cement higher, and Ramco Cement as well is higher in today's trading session because of this buzz of a price increase. How much is accepted is very, very important. So keep an eye out on that front. And IMFA, that's Indian Metals and Ferroalloys, the stock has been a big underperformer. Last quarter's numbers were very, very disappointing. But the management had told us that maybe, in fact, pricing will improve from here on. And if you look at the global setup, a couple of these miners globally, they have shut down capacity, which is explaining why, after correcting from 900 rupees to around 700 rupees, today the stock has moved up a little bit. So these are a few stocks that I'm looking at, as of this hour. But let's find out, how do you trade the final hour of trade? Mitesh Thakkar joins us to help us out with his take. Well, Mitesh, you were sounding mildly positive. And now we've got a 300-point rally, and who would have thought? We've got a 900-point rally from the recent lows. What do you suggest? Take some money off the table, or we're good for more?
So, good afternoon, Nigel. I think we're good for more. See, there are two reasons for that. One is that the Nifty has, while it's slightly tapered off from the highs of 23,700, we are still about 23,630, 640 zones, and that could mean a test of 23,950, 24,000 to begin with, and then maybe even higher levels. Secondly, I'm just waiting for the bank Nifty to get past 50,150. 50,170, 150 is a zone where some averages are converging. But the way the indicators are shaping up, I think if not today, in a day or two, we should be able to clear that. Once that happens, the bank Nifty could head towards 50,720, and in a good case scenario, 51,500, 600 zones. Stay positive. I think very clearly the market is showing signs of resilience and extraordinary strength. Yes, after a good rally, there could be mild pullback, but that would be a buy on decline kind of a scenario for me. So I'll be hoping that this move continues.
Mitesh, what about stocks? What would your last hour trades be?
So on the stock side also, in line with my view, I have positive buy calls. In fact, I did believe somebody discussed Reliance. I forgot who, but Reliance is something which is showing good momentum. So buy here with the stop below levels of 1266 for targets of 1320. And once we clear 1320, see that's the high which the stock made in December, 3rd of December and then 5th of December again. And then again, on 17th of January when the numbers were announced. So 1320 is the first target, but once we clear that, I would be looking at levels of around 1380, 1400 to begin with, and then even higher levels. And second call is a buy on Chambal Fertilizers with a stop at 504 for targets of 525.
Thank you very much for that. Reliance up 3%, but Trent is down 7%. So Shilpa joins in for more on what's ailing Trent today and what's boosting Reliance Industries. Shilpa.
Well, you know what seems to be ailing Trent today is the comeback of the fast fashion app Shein. Now, if you know, on Sunday, Reliance Retail has brought back the very popular app Shein back into India after it was banned in 2020. Now, the app went live over the weekend on both Play Store and Apple Store. And within like a day of it being back in India, it already saw over 10,000 downloads and it was among the top apps on the Apple Store as well. Now, currently, Shein is in India and it's already delivering in Mumbai, in and around Mumbai, Bengaluru, Delhi, NCR, and pan-India shipping will also start soon. Now, remember, this app was banned in 2020 because of data security issues, and at the time, Shein was a very popular fast fashion app in India, and even today, it is an extremely popular app globally as well. Now, how is Shein 2.0 now as it comes back in its new avatar? Now, Reliance Retail has brought it back. The entire operations and everything will be managed by Reliance Retail, and the data, the customer data also will be within India and will be with Reliance Industry. Shein is only a technology partner to which will receive a licensing fee from Reliance Retail, and it will not have any access to any of the customer data in India. Now, the app, like I said, is already live, and it will. The other difference is that Shein will only sell items that are made and designed in India. That is also part of the deal of bringing Shein back to India this time. And you know, I was taking a look at the app. So far, only apparel is available for men and women, and this is as low as $199, and that is probably what is, you know, causing jitters for Trent as well, because Trent with Zudio is one of its biggest competitors right now, where Zudio has grown exponentially in the past couple of years because of its affordable fashion offerings, where everything is below $999, right? And it doesn't only take on Zudio. Shoppers Stop's Intune, Reliance Retail's Ustar, ABFRL's Style Up, all of these will now will face competition from Shein. But it will be interesting to see how, you know, the customers will take to this, because the landscape has changed a lot. A lot of this is also available online. And while Shein is now only available online, Zudio is only available offline. So we have to see how that will play out. But we know how aggressively Shein has been growing, and we know how aggressively Reliance Retail also, you know, grows its products. So hence a little bit of jitter there. And in fact, Shein's products will also soon be available on Ajio also. So Reliance will look at cross-selling Shein items on its other platforms as well. So that is also cause for concern when it comes to its competition. But it's, you know, it's also important to note that Trent's shares have also corrected over 30% from its peak of about 8,500 that it touched in October 14 last year, and it has, you know, delivered a solid 83% returns over the last year. So there's some correction happening there also. But yes, Shein is something that everyone will look out for, and as you can see, early response has also been massive. So it will be interesting to see how the value retail space now plays out, both online and offline as well. Back to you.
Just quickly, will it remain an app? Or are they thinking of on-ground? They're not thinking of any on-ground presence as of now, right?
Shein has always been an online player in India so far, right? Even globally also, it is an online fashion app, and we don't know whether Reliance will bring any of its products to, say,
into their stores.
Yeah, that is not clear, but they will definitely bring it to Ajio. It will be available on Ajio, but no offline presence yet.
And look at the,
thank you.
No, absolutely, Shilpa. Great. Thank you for that information. I think Shilpa put out numbers, right? $18 billion.
In the first half of the year, yeah.
So that's $36 billion revenue. I looked at Trent. Trent does $1.5 billion in revenue.
Yeah. This is global, right?
The market cap, they filed December 24 article. In London, they filed for an IPO. Valued at, the last funding round happened at $66 billion. Trent is about $22 billion.
$66 billion on a revenue of about $36 billion. $36 billion.
And $400 million, so annualized $800 million in profits, basically. And I think, so, I mean, you know, it's not like, of course, there's just 1,500 crores in net profits for Trent, right? So, much larger player, and of course, a global footprint, etc. as well.
Yeah, no, I was just saying because for Zudio, their offline presence did help. I mean, that growth really came in from the offline channel while the others were always there online. But nobody perhaps thought that offline could become as big as it did for Zudio. But maybe we'll take that up with...
I think this was all what Shilpa was saying, right? Privacy concerns. When TikTok, I think was...
when they banned, other Chinese apps, including TikTok.
This was part, I think this was part of that. And... so a little bit of softening is happening, definitely happening, and I think the secretary.
But now it's Reliance which will be housing.
That's what you said.
All the data centers, exactly.
Indian partner, it's all going to be local, etc.
They're going to manufacture also 100% locally. Earlier, it was all imported from China.
So the question is this dip on trend? Is this dip an indication that the good times have rolled over, or is this dip the best buying opportunity you'll get in many months? Let's put that question to Deepak Shenoy. Deepak, good afternoon. Great to have you on. Welcome to the debate. Trend, buy or stay away?
This is interesting because we own Reliance, so obviously at some level, if that's the competition, that's where it is. But I think in general, the formats, whether it is Reliance and through Shein, I mean, I don't see this as a reason why you would, bump up a Reliance stock by 3%. It's not that meaningful, I think, at least overall. But this is going to be a space where competition means that even though India may consume more in the branded segment, in the online branded segments as well, it may not necessarily lead to more profits for any single player because there's so much competition that at some level, you're going to get the pie spread across a lot of people, and therefore I don't expect profitability to start moving up right now. But in the coming year or 2 years, if you look at it from a trend perspective, overall, I think both Trent and Reliance Retail should do well. They address a very interesting, upcoming niche, and I think that is where the largest growth has been in the last few years, and I think that will continue going forward. The problem, of course, in Trent is valuations. In Reliance, it's the confusion of which part you're paying, how much are you paying for which part of the business. So both of them, have short-term issues in terms of how do they justify that price inside their share, inside their market cap. So I think, that is a different problem. But I think the business should grow well in the long term, both Trent and Reliance Retail.
But would you buy Trent? At these levels?
I'm not buying Trent right now. It's just expensive. I think Reliance is a better bet. If it does demerge, this might actually result in a much lower valuation for what is effectively going to be the same business. But you can't see it right now because it is confused with the oil and consumer and Geo and all the other businesses together.
Well, at least in the quarter gone by, Reliance Retail was the big positive surprise in the earnings this time. And Shein coming on board will only boost Reliance Retail's, presence. But let's get to Godrej Properties. Reported their Q3 numbers, revenues and profits have surged on a year-on-year basis, but the EBITDA has slumped. Vinny is here with the details.
So absolutely, in terms of numbers that are coming from Godrej Properties, specifically in terms of the pre-sale or the booking value that you're looking at, 5,446 crore, which is a bit of a decline versus last year, 5,720 crores. Collections, on the other hand, have seen an uptick of around 27%. The net debt of the company has seen a significant reduction on a sequential basis. So important to watch out for that. We're seeing that the stock was also buzzing in trade. Now, booking value for the 9-month period has also seen a good uptick of 48%. This is the highest ever booking that they've seen in terms of 9-month period for the company, and they've already achieved the 71% of annual booking guidance which the company has mentioned for FY25. Collections around at 10,086 crore rupees. Management said that they are on track to achieve that 27,000 crore booking guidance for FY25. Total estimated booking value of potential that they have over here is around 23,450 crores, which is also surpassed the guidance that they've given of 20,000 crores. So guidance is also much, they've already surpass the guidance for most of the factors that they're given for FY25, and that is the reason why the stock is in focus and buzzing in trade.
Okay, that's Godrej Properties. Got it, Vinny. Thank you very much for that. Deepak, very quickly on real estate, whether it's Godrej or anything else, because that's one sector that's supposed to be a beneficiary of this income tax cut, right? Maybe some of it will make its way to larger houses or upscaling, upgrading of houses as well. So real estate or some of the related plays as well. I mean, your home improvement companies, tiles, sanitary ware, etc., etc. Anything there?
So, Surbhi, I think home improvement may be a thing because with 1 lakh rupees, I don't think anybody is going to buy a house meaningfully in the tax saving. You have to look at the people who are going to save this tax are largely concentrated in metros, where the prices of houses are so high that this 1 lakh rupee extra money is not going to meaningfully mean anything for most people who earn the amount of money to be able to save that tax. So I think it's not going to result in an increase in housing prices or housing bookings. But in general, I think you might see more in terms of how home furnishings, maybe remodel bathrooms or however that kind of need arises. So that might be one area. Consumer durables, including auto and cars at one level, on white goods at the other level, ACs and fridges and so on, which the price points kind of meet the level of tax changes that you're going to see. I think that may be the consumption play here. Real estate per se is not seeing as much outtake. If you see the RBI report recently, we're seeing inventories at relatively high levels. Bookings and new launches seem to have come down. So while the numbers look good for the last quarter, I think the going forward point, this is not the greatest point to enter. I think we'll see a slowdown in sales.
Yeah, Deepak, no, I take your point on real estate, and that was more a question because, I mean, this is the fiscal side is just the one side of it, and then RBI, who knows, they're saying Friday onwards we start getting rate cuts. But let's leave aside real estate. On home improvement stocks, some names, whether it's durables or home improvements, what do you like?
So durables, of course, we like cars and two-wheelers at this point. That maybe looking at it from the higher end part of the thing. But we haven't looked more, deeply into home improvement. Companies like Cera have kind of made serious inroads here. Asian Paints and the paint companies are generally a little expensive, so valuations kind of put it in a little bit of a disadvantage there, and plus the competition. So you're seeing Birla Opus come in big time. They're looking at JSW enter the market and advertise also big time. So again, fragmentation is going to cause issues over there. So I'm more looking at maybe it could be at the toilet, the sanitary ware kind of companies where you might see floor tiles. Kajaria's probably one of the players there that you should look at, and there are lots of others, from curtains and plywood and so on. But we haven't done a more deeper dive into this yet. I'm just kind of waiting for all the results to come through, and then we might do something more. But to be fair, this may be an interesting play for the next year.
All right. Deepak, we'll leave it there. Thank you very much for joining us and running us through all of that opinion as far as various stocks go. Markets up 360 points. So at least on the Nifty, we are pretty much at the day's highest point, and it's looking good. Well, we'll have Abhiram Elaswarupu from BNP Paribas India join us on the other side for more market conversation. Stay tuned. Okay, welcome back. So you've got the market, which is looking pretty solid. Abhiram Elaswarupu is head of India equity at BNP Paribas India. Abhiram, good to have you with us here. Thanks very much. The Thermax numbers, by the way, are also at the bottom of the screen. I'm not sure if there's, something like a one-time or something, but profits are down sharply. Revenues are up about 8%, and we'll have our, research team member join us to give more details. They're pouring through the numbers as we speak. EBITDA is absolutely flat as well. This is all on a quarter-on-quarter basis. I think, in that same industrial space, Cummins reports tomorrow. So that's the other thing. We'll get to previews in just a bit from now as well.
On Thermax, I don't know if it's related. I haven't opened the full P&L, but they have decided to give a corporate guarantee of 400 crores for one of their arms. Now, I don't know if they've made a provision to that effect, which is why, that could have pulled down the bottom line. Optically, it would be lower. But there is a corporate guarantee of 400 crores that they're...
the number, I mean, it's not a cash item. So I don't think that should affect the actual numbers. But that is important. That's not to say that it's not important.
No, I don't know, I mean, whether this is a group entity, if it's related party, unrelated. We'll look at those details.
Absolutely.
But yeah, they're writing a corporate guarantee worth 400 crores.
Absolutely. So revenues and profit numbers, basic numbers are up. And as I said, we'll have someone join us with more on this one. Abhiram is with us. Abhiram, thanks for waiting. Just a quick word on the market first. Do you think we've seen the lows and this is now going to look a lot better? The general consensus out there is it's going to be fairly volatile, so it's not one way. But what's your sense?
You're right. I think it's a volatile environment. And the truth is that the picture is changing on a daily basis now. And I expect that that will probably continue at least for another month or so until the dust settles on various aspects, not the least the new one that's about tariffs. So my thinking about the market is that from March onwards, you could form some kind of a durable bottom and end the year with maybe high single-digit returns, which is what we had for the large caps last year, to be honest. So a nifty target of 25,500 is where we see it from here.
Good afternoon and good to see you in. Abhiram, if I remember correctly, on the consumer staples, that wasn't a sector that that you like too much, if I remember correctly. But now suddenly there is this bit of this consumption boost that's come about. So how are you playing the consumption theme? If you could give us a sense on that.
Let's kind of break down the budget situation a little bit here. So what we have is, as per budget documents, $11 billion odd consumption boost. But if you break it down and think it's really going into the affluent consumer, mostly the urban consumer, and you got to see what kind of products or services they will consume. And I doubt it's still going to be staples. You could upgrade the staples item that you buy, but I think the incremental spending will more likely go into first a little bit of savings. So that should be beneficial for AMCs, insurance companies, those kind of things. The second could go into a bit more discretionary purchase. So the long pending surgery, for example, getting your tests done. So that means a little bit of healthcare and pharma. And the third bit is discretionary, which means four-wheelers, maybe home improvement, all the additional things which are not extremely large ticket, but certainly not staples. So somewhere in between is where I think the biggest beneficiaries lie. And I do not think that our view on staples is dramatically going to change as a result of this.
Abhiram, hi, afternoon. Rima here. You liked the EMS space, electronic manufacturing companies, and some of them, like Keynes, had a very sharp negative reaction to their numbers. So what have you made of the Q3 numbers that we've seen so far from the EMS companies? And have you changed your assessment? Maybe you think the stocks have run up too much and therefore there is a case for a little bit of profit booking. Valuations have run up. So talk to us how you feel about the EMS companies.
I mean, there's no doubt that valuations have run up. The stocks were very strong performers for the past year or so. But if you take a look at the large EMS companies, I think the results, at least for a couple of them, were quite good. What's more encouraging is that most of them continue to report 30, 40, 50% revenue and earnings growth, which is quite scarce. And therefore, the view having a long-term positive bias towards the space absolutely remains. I think this theme is still quite structural. That doesn't change. Now, the truth is that the market has corrected quite a bit. So you already have maybe small caps correcting 15, 20% from their peaks. It is quite natural that companies that have run up a lot will correct. But the positive view is still very much intact. The drivers, frankly, are intact.
Okay. Also, I'm still looking at Thermax, just pointing out that in the base quarter, they had an exceptional item. There was a gain of 126 crores from sale of property, which obviously is not there this time around. So that's another sort of reason that would have gone into how the bottom line is looking. I mean, year on year, if you're comparing, it's looking quite low. 200 crores versus about roughly 100 crores. That's Thermax. But otherwise, the numbers are being received quite okay, at least for the time being, by the market. But must say that the growth is not really blowing away the rooftops in the third quarter. Again, year-on-year comparison, it's all right. Mostly, I think it seems to be single digits for most of their businesses. Abhiram, hi. Good afternoon. Good to have you on the show. Since I'm talking about Thermax, let's actually, bring you in on this because ever since the budget, everyone's trying to figure out, actually even before the budget, people had started booking profits in this side of the market, right? In capex, capital goods, etc. Now, how are you positioned? Do you think valuations have become a bit more reasonable? Would you add them back to the portfolio, or what's the stance?
Well, I'll give a slightly macro answer and then kind of address the question you posed. So it's rare that unless you have a calamitous situation that the market corrects 15-20%. And if you see where small caps have gone, maybe 15% already from their peak, maybe closer to 20, to be honest, that to me suggests that it's about time to start doing your homework on which leg to buy next. Now, looking at capex, actually, I'm not all that bearish about it. There's a couple of ways to think about it. First and foremost, what the government has probably realized over the course of the budget exercise is that you can only spend that much in a particular year. And last year's situation tells us that they couldn't actually spend all that they budgeted. And therefore, while the market took the capex growth number to be quite weak, I think that it's quite practical. The issue, though, now is that the rotation within capex is happening. So what you're seeing is more towards power and metro, for example. And I also think one more thing, which is that if the government is to achieve its 2025 budgeted number also, it means a significant spending in the fourth quarter. What that tells me is we are pretty close to a capex bottom. And this is about the time to start doing work on companies in the space. And as I mentioned, power is one. Metro is another, renewables probably as a long-term theme anyway, to do a little bit more on all of these areas.
Okay, all right. No, I think that's a fairly good point that you make there. By the way, Abhiram, on Friday, right? I mean, you'll get this easing from the RBI. Is your team on the expecting anything more apart from a 25 basis point cut?
Well, we do think that the conditions are ripe for a 25 basis point cut. I also suspect there'll be a little more to add about the liquidity measures, maybe something about CRR and so on, because we have seen the RBI kind of change its stance a little bit towards easing the liquidity situation. So I think both of them could happen. Now, there's a bit of an issue in this, which is that in the meantime, we've had the Trump tariffs come through. And I'm not sure if that's a cue from a global perspective, because it does suggest that the Fed may hold through the rest of the year. That said, I think the conditions are ripe for a 25 basis point cut.
Thank you, Abhiram, for joining in. The countermeasures from China come into effect only from the 10th of February, which leaves about a 6-day window for further negotiations if a deal could be struck between China and US. That's the hope that is alive right now. But let's talk about the defense stocks. They're buzzing in trade today. Defense Secretary Rajesh Kumar Singh says India is on track to sign the largest number of contracts. Speaking to CNBC-TV18, he also said that the government needs to ensure that the contracts triple compared to last year. When asked about Donald Trump's message asking India to buy more defense equipment from the US, the Defense Secretary said that India is willing to procure more from the United States if they meet the requirements on quality and indigenization.
We are on pace right now to sign the largest number of contracts ever in our history.
Okay.
The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. And we intend to ensure that order books are full across the board in the defense industry, so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years, and everybody is on the same page when it comes to fulfilling our capability gaps. We do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that we will be able to dangle before the Americans. We are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Big statements coming in over there. Defense stocks today have recovered after the steep losses over the last few days. How do the valuations stack up? Upasana is here to tell us more. Upasana.
Well, certainly defense stocks were under pressure yesterday after the lower defense allocation, lower than market expectation, was seen in the union budget. However, defense stocks have recovered today after the bright roadmap laid out by the defense SECI. Now, let us look at the valuation, order book and revenue visibility within this defense pack. First up is Bharat Dynamic. The stock is trading 45 times its one-year forward PE, and the order book for this company stands as high as 19,500 crore, which is nearly 8.2 times the FY24 sales of the company. Next up is BEL. BEL reported, mind you, a strong set of numbers led by healthy order book execution, trades at 37 times, and the order book stands currently at 71,100 crore as of 9-month FY25, which forms 3 times the FY24 sales. Again, strong revenue visibility here as well. BEML is the next one on the counter. It trades at 30 times the one-year forward PE, and the order book as of H1 FY25 stands 15,100 crore, which is nearly 3.7 times the FY24 sales of the company. And lastly, HAL also remains in focus as it trades at 28 times the one-year forward PE, and the order book is as high as 1.2 lakh crore as of H1 FY25, which forms nearly 3.2 times the FY24 sales. So all in all, the order book visibility remains quite strong. Revenue visibility remains strong. There is strong order book execution as well. And guidance of all these companies also remains quite upbeat in the upcoming years. So defense stocks remains in focus.
Okay, all right, Upasana, got it. And yeah, they have stopped falling. 2 days of dropping, Saturday and Monday. Today's turned out to be better for many of these companies. Look at that, about 3.5%, 1.5% higher. BEML still lower, but HAL is the one that's really been flying away. We'll take a break on that note, come back with all the buzz from dealing rooms, D Street chatter coming up with Nimesh, and some final trading ideas with Mitesh as well.
Welcome back. Well, the stock of the last few minutes has to be Kalyan Jewellers. Pull up the intraday chart on that stock. It's moved to the high point of the day, and it could be a factor of short covering as well that's come about. Now, keep in mind a few factors. They came out with a set of numbers which didn't look too bad, but the positive in those numbers was that, in fact, the member from Warburg Pincus came back onto their board. And I think the street got some confidence from that fact. The other important point is the last time around, the promoter entity had bought around 530, 535 rupees per share. So that's the important mark. The stock had slipped all the way to around 450 rupees, but now it's moving higher. There's an element of short covering, I think, because it was at upper freeze with a gain of 10%, and now it's building onto those gains. So keep an eye out on Kalyan Jewellers. But we have been asking a lot of market men all through the day. And I think Nimesh could have a possible answer with regard to what he's picking up. Nimesh, we have been asking when the FIs will start buying, well, they'll sell less. Should we brace ourselves for maybe a positive surprise today?
Well, that's the feedback, Nigel. That today there is genuine buying from larger FIs. So I wouldn't be surprised if there is a positive FI number in the cash market. That's overall feedback. Just a word on Kalyan Jewellers, Nigel. 530 was the price at which the block happened when promoters also participated. Yes. And after the stock went down, they had to create fresh pledge. Yes. And that was largely because they were in a silent period. So they couldn't do anything else. So they had to create more pledge. Yes. Now that the stock has gone above 530, there is a bit of an ease that even that pledge could get released. So I guess that's the reason why there is a bit of short squeeze as well in Kalyan Jewellers. So just to add that point. From a market point of view, yes, there is buying interest is what I understand. So look out for the FI number. Could be a positive number is the sense I'm getting in. It's a trending up day, right? I mean, throughout the day we've seen every dip is getting bought into, and there has been a rally as well. I guess the buying is largely from the passive fund. So it limits to largely large cap names, the nifty names, so to speak. But outside that, I guess the sector to watch is clearly real estate. That's one sector which is well bid. And I guess the entire rate sensitive sector is in focus out of the RBI policy this week. So that is something to watch out for. And I guess market is now sensing in pricing in a 25 basis points rate cut. So that's something to watch out for. Again, the other short squeeze seems to be in the PSU names. A lot of PSU stocks are buzzing in trade. The index is up 2.5%. Yeah. And a lot of individual names are doing well today. So I guess post the clarity to CNBC-TV18 by a lot of the secretaries, yesterday has given a bit of confidence to the PSU basket as well. I guess technically now what we are talking about 2300 as a big resistance. Now that will act as a big support now that the market Nifty is trading above that. So watch out for that level as a big support now. And looks like this trend can continue given the fact that there is so much of short which is still pending. And the FIs tend to be net buyers at the margin in cash market.
All right, so that will be a positive surprise. Even if they sell 500,000 crores, it's still okay compared to what they've been doing in the last couple of months. But Nimesh, tell us, what about individual stocks? What do you pick up?
Right, so in terms of individual names, the first stock is Hyundai India. That stock has sharply recovered in the last few days and the volumes have picked up as well. I guess largely because there is buying interest back from larger institutions. And I understand a leading domestic mutual fund has been an aggressive buyer in Hyundai India in the last couple of days. That's the first name. The second stock is Dabur. Well, the stock has done well post the budget announcement. Again, I understand for Dabur, there are bid blocks been pending at some FIs. So it looks like some interest is back in the consumption names, and Dabur includes in that in terms of buying interest there. The third is a couple of stocks which are up in trade today, Samudra Motherson as well as Sona BLW. Both are buzzing because of the reversal of tariff hike. But from a flow perspective, there is selling pressure which is continuing. So the upside is getting sold into, is what I understand, as far as flows are concerned in both those names. And the last is TD Power. For second day running, that stock is buzzing in trade. Volumes are on the higher side, and looks like the FI interest is back. So there are buy flows, and so expect high delivery volumes. And TD Power is something which is again well bid by larger institutions today.
Okay, well, Nimesh tells us and that there perhaps is a positive, flow number, FI number. So we should keep that, ready. Sorry, Nimesh?
So, Prashant, just to add, whatever the feedback I've picked up from the institutional desk, there is a very large basket buying, is what I understand. But do remember, now even in the India market, 50% of the flows come via DMA. So, actual numbers, not many get to know till the market closes. So, whatever feedback that I've picked up looks like it's a decent buy number or a buy figure from the FIs today.
DMA is direct market access. And that's basically foreigners putting their own trades in and not going through an intermediary, a broker here. Look at Kalyan. I think it is limit up 15. I think it's at the 15% mark. I think it's frozen there for a few minutes, and then the freeze opens up. But it's moved up swiftly, very, very swiftly on Kalyan. So 578, and that will come as a relief for many out there in the market, including funds, mutual funds, which own a lot of Kalyan jewelers, funds like Motilal, etc., for example, which own a fair bit of Kalyan. So it'll come as a relief for both individual investors who own it and, of course, funds as well. So that's a big mover at this point in time. Market, of course, is doing well. 370-point gain, so 23,730 is what you have at this point in time. So this is turning out to be a fantastic session. Mitesh is with us, and Mitesh has been, of course, of the view when we spoke with him earlier also that perhaps there is more to go an hour back, and I think in the last hour we've only added more. Mitesh, what's the view now, and what are trades?
So, Prashant, my view remains positive. We are closing with more strength, so likely that we should see continuation. On the stock side, I have a BTST on Coromandel Fertilizers. Keep a stop at about 1867.66 and a target of 1895 on the upside is possible. And I already given Reliance as a buy. BTST on Geo Financials can be taken with a stop at about 242 for targets of 250.
Thank you very much for that. And now let's talk about the high-stakes battle. The national capital is all set to go to the polls tomorrow. It's going to be a three-way battle between AAP, Congress and the BJP. Last time, in 2020, AAP swept by winning 62 out of the 70 seats. Shivani joins in with the expectations this time around and the key details. Shivani.
Well, Rima, absolutely. Big contest, big battle in Delhi tomorrow. Three-way contest, clearly, as you mentioned. But Aam Aadmi Party has been the favourites in the last two consecutive times. As you mentioned, 62 seats out of the 70 seats. But this time around, there are 700 candidates on these 70 seats. So clearly a high-stake battle. But it's not going to be that easy for the Aam Aadmi Party this time, because whatever has happened with the liquor scam and the arrests of the top brass thereafter, this has to have an impact on this time's elections as well. So, but however, the Delhi national capital has been a high-stake electoral battle for the longest time. It has this time 1.55 crore voters in total. 2 lakh voters are going to be the first-time voters. These are 2 lakh people in the age bracket of 18 to 19 years. So the demographic is really interesting. Among that, 83 lakh male voters, 71 lakh female voters, and very interestingly, 96,000 female voters are new registered voters this time around. So clearly, that's why all the three parties have been targeting women-centric schemes like the Mahila Samman Yojana that Aam Aadmi Party has presented for 2,100 rupees per month for women of Delhi. Clearly, the Pyari Didi Yojana by the Congress promising 2,500 rupees again. And similarly, on the similar lines, BJP has also promised 2,500 rupees to the women voters. So how much this is going to yield results? Because we were on ground in the last 1 month, and according to the ground reports that we have spoken to on the field, bigger issues remain in the national capital, that are the safety and security of the women, but also unemployment this time. Because if you remember, in 2022, Aam Aadmi Party's budget was called the Rozgar budget, which said that it will give 20 lakh plus jobs to unemployed youth in the city, in the national capital in the next 5 years. But it has remained a non-starter sort of a thing. And the Rozgar Bazaar 2.0, the website that was supposed to give out 25% of these 20 lakh jobs, is also a non-starter, and there has been no talk about this particular thing, unemployment per se, from the Aam Aadmi Party since then. But, let's see, because this has been one of the things that Aam Aadmi Party has faltered on. So this time around, it doesn't seem that easy for the Aam Aadmi Party. Like you said, last 2 consecutive times, they have won big numbers. But this time, it seems like a tougher contest. But we'll have to wait and watch till the 8th of February when the results are out. But clearly, a big high-stake battle tomorrow in Delhi. Back to you.
All right, no, absolutely, and I think will be closely watched. Shivani, thank you very much for that. Titan reports numbers. Let's get a quick preview going. Vinny's here with details. Vinny.
So absolutely, in terms of numbers from Titan, we have the Q3 update that's already there. Standalone revenue growth, what we're expecting this time is 24%, jewelry business growth of 26%, and started sales expected at 21%. Now, revenue growth this time, what they highlighted was mainly led by festive as well as wedding season. So overall, we are expecting the revenues to come in at around 16,710 crores. Margins expected at 10% versus 11.2% last year. So contraction in terms of margins, mainly because of the change maybe we could see in terms of the mix, and the started sales are something important to watch out for. Profit growth of 9% is what we're keeping an eye out on. Profits expected at 1,134 crores. Key to track in terms of one-time inventory loss that's possible this time of around 250 to 275 crores. Margins, what is the impact of that going forward? Started share, we are expecting a bit of a decline on that front, but what is the outlook going forward? And watch out for any inorganic announcements that is possible to come out with the result will be a key to watch out for that.
Okay, all right, Vinny, got it. Thank you very much for that. So Titan is going to be in focus tomorrow, of course, as well. We will take a break on that note, come back on the other side. Jai Bala from Cash the Chaos joining in.
Welcome back. We'll just keep your eye on ITC hotels. There's massive volumes in the last 1 hour or so. More than 2 crore shares have exchanged hands. Total volumes for the day as well, close to around 4 crore shares. So we'll keep an eye on that stock. How much of the selling is pending? Because the stock has seen big volumes in today's session. That said, let's go across to Jai Bala of Cash the Chaos, who joins us. Hi, Jai. Markets have bounced 1,000 points, 900 points to be precise, in the recent lows. You've been a little bit skittish. What do you think? It's the rise before a bigger fall.
Hi, Rachel. Good to be here. See, if you recall, in December, I pointed out a couple of dates on January 23rd, 24th, and February 18th. The market has bottomed from January 27th, which is one trading session after Jan 24th. So the potential for this market to hold the January low is quite reasonable. And I still hold the belief that we still haven't seen the final low for the bottom. But I'm willing to abandon that if the markets were to take out 24,800. The current projection is that this rally could extend to somewhere close to 24,100, maybe not 24,800. But this market has bullish potential if it can show further strength going forward. I'll be watching February 18th, the date projected, as to what the market is doing around that date. So right now, I'm still anticipating the market to get lifted a little more higher. If you hold puts, maybe it might be safer to exit them on dips and then probably reposition once the market comes somewhere close to 2400 or even 24,800.
So how to play this rise on the Nifty towards 24,100 or perhaps even higher to 24,800? What's the best trade now?
The best sector is still probably the IT sector, which is still not broken down, and it's still the one sector that's holding out. But still, there are chinks out there. But there is still bearish play out there. I'm bearish on Britannia as I believe that the FMCG sector has clocked a multi-year high. Britannia, I'm bearish against a stop loss level of 53.79, and Bajaj Finserv, if you try to trade below 1470. I'll be bearish. 1740. I'll be bearish on it, and that view get invalidated if it crosses 1856.
Okay, all right. Sorry, on the Nifty, above what level will you change the view, Jay? You said? Sorry, I missed that.
Yeah, about 24,800. It's not an exact figure; it's a rough figure.
So about 1,000 points more from here.
Yeah, that's right. But anticipate 24,100 to put a lot of pressure on this market. The significance is that the AI-housed semiconductor index is pointing that the U.S. markets, the technology sector has clocked a very significant top, but that's not yet confirmed by the Nasdaq 100 index. As I pointed out last week, I'm waiting for the Nasdaq index to confirm that. If you see the Nasdaq futures trade below 2763, 2694, that will confirm what the semiconductor index is pointing out. So bullish with a bit of caution.
Jay, thank you very much for joining in. For now, we'll chat with you. Closing what's been a very strong session for our markets. The Nifty closing above 23,700 with a gain of nearly 400 points. The sensex up 1,400 points, 78,500 plus on the sensex. And now the indices have turned positive for the year, at least the Nifty has. The mid-caps and small caps participated in the up move. The advanced decline ratio was positive. We had two stocks advancing for one in the red. Sectorally, PSUs bounced back. Capital market plays higher. Defense up and about. Banks gaining nearly 2%. PSU banks doing even better. And on the way down, it was just the consumption names which continue to get hit. And Trent, that was the big loser.
Absolutely, and lots and lots of moves today, right, in the broader market space. And maybe if you can just quickly follow me and look at these stocks, right? Kalyan, if you can put this up, big 14% pop. Vishal Megamart about 7-8% higher today. Neyveli Lignite, NLC India is the stock. There was HAL, which was up strongly, sharply. That's NLC, and I'm just going by volume-led gains. HAL, ABB was up sharply as well. There was AG's Logistics, very large volume-led gain today. Motherson's Sumi was another one, which reversed after yesterday's cuts. Cummins India, which reports tomorrow, was a sharp gainer, 5-6%. Amber was another one. Look at something like a REC, look at Castrol. These are all big volume-led gains. Novama was up sharply, 10-11% capital market play there. Prudent, we should put up Prudent Corporate Advisory, again from capital market play. Novama on your screen, back at about 5,700, and Prudent also reversed. There was JSW Energy, which was up sharply today. Sundaram Finance, of course, NBFC, and large gains coming through. Polymedicure, basically. We had the medical devices company, we had the management with us earlier. NCC, Techno Electric, Taj GVK. Nigel was talking about ITC hotels. Look at Taj GVK as well, which is actually Taj has been strong since the morning. And of course, India Cements. Westlife is up 20% this month. So that's just a sampling of what happened. So it's a pretty solid across the board volume-led recovery that we had on our hands. We'll take a break here, but we'll take you through what to watch out for as we come back tomorrow. Rima, I'll do that in Markets Forward. Stay with us. We're back.